Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, October the 19th. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro, micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. Our hypotheses are our multiple plans that we put together based on what the normal auction will do. Then we wait to see what the market is doing, and then we execute the plan that best suits the market. We're not trying to predict the market. We're not trying to hedge our bets. We're trying to prepare for whatever the market throws at us. Therefore, we can execute the plan that best suits the market and not have to think about it or develop the plan on the fly. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Kidoki. So going to yesterday, our main hypothesis was a open auction out of range, a move down, and somewhere between the 58 and the 56 area. We are looking for initiative buyers to step in, rotate us up, and go and equalize the all-time high and take out the overnight high. Basically, that's the plan we got. Hypo 4 was an open auction at a range and basically going sideways, fighting the range high. So again, we see kind of a combination. Interesting thing is we had a neutral day, which is a low probability on on Tuesday. Yesterday we had a low probability day. We did not take out the overnight high or the overnight low. So low probability. And, as has been the case up until tonight, or the Globex today, we had a whopping 4 3/4 point range. Not much fun to trade. It really sucked. Anyway, the big news, of course, today is we open up and we're going to have a huge gap down. We're going to have, I don't know where we're going to open, but our close yesterday was 60 1/4. So even if we open up right here at 50 1/4, we're going to have a 10-point gap going right now, and this is a big interesting move. You can see that the move didn't happen until Europe opened, so I'm not sure what news that created this. I don't care. Of course, you had a beautiful FUBAR Mr. Sneaky, and this is also right at a very key level, which is that 43, which is our key line in the sand. V-shaped profile. Inventory is pretty much 100% net short. Very thin profile above the 51.75. So if we do get above there, I think we're going to get some shorts getting squeezed here and could move up towards the range low. In terms of gaps, in terms of probability of getting filled, we have right now about a 10-point gap. So there's an 87% probability that the gap does not get filled. This is a big move down. And I always talk about this, is that when the market is getting ready to make a big move, a lot of the times they give clues in the Globex. And there's range expansion in the Globex. And this is the first one. Do I think the market's going to fall apart? No. But we can start look for some negativity in this market and some shorts in this market based on this rally. Crappy thing is I didn't trade last night, so I completely missed this move, and I missed the move in gold. But hey, that's that's life. Let's take a look at the news today. We just did have the Philly Fed manufacturing came out 27.9, better than 22. We got basically a 4-point pop on that news. Jobless claims came in better than expected. The rest was pretty non-eventful. In 5 minutes, that doesn't really matter. In 35 minutes, we've got FOMC George speaking. 50 minutes, we've got the Bloomberg Consumer Confidence. And then 10:30, we've got natural gas. 1 o'clock, the 30-year TIPS auction. And that's really all the news that we have, unless there's some headline news. I always like to start my day taking a look at the market macro to micro. I start with my monthly, work my way down. I use a 9 EMA and a 20 SMA. I'm looking for where we are within each time frame, and in terms of the trend, you can see that monthly still strong. We're in the upper channel of this upward sloping fork. We're still in the weekly channel that we're up, and we're still one time framing up. We do not halt the one time framing up on the monthly until we get below 24, 45, 50. What is that in perspective of where we are? Well, it means that even if we move back into the mid 2400s, the overall trend on the monthly continues, okay, and it's just a normal pullback. Going to the weekly, we have been one-time framing on the weekly as well. We don't halt the one-time framing until we get below the 39 and a quarter. Now, we did come back down to 42.50 and test that 43 key line in the sand, but we popped and we're right back into the balance that started this push to the all-time high. And we don't challenge the trend on the weekly until we get down to 25.14. And the reason I'm trying to explain and emphasize the point that on the longer time frame, a pullback of 30, 40 points doesn't really mean anything. It's just it's a normal back and fill. And there's going to be all kinds of people calling out there, oh, the top is in, and that may be the case, but until we get below the and start challenging the trend on the larger time frames, it really doesn't mean anything. Now, we are challenging the time frame, the trend on the daily time frame, and we do have a bearish engulfing day setting up. It's not done yet, so you never know. You can't say it's a bearish engulfing now because it's still not closed, and we can very easily pop back up and rally off of this 9 EM. But we are seeing some weakness. We are halting the one-time framing up that we've been seeing since the 9th of the month. We've been one-time framing up on the daily as well. Going to the intraday, this is where we start seeing some weakness coming in. We've got a move down below the 9 and the 20. It's not completed yet, but on the 4 hour, we could see a FUBAR Mr. Sneaky tech gap, and that will be closed with the move up into the 55s. Going to the 1 hour, you can see that trend down is accelerating. We're below the 9 and the 20. We're consolidating. This could turn out to be a bear flag. We watch to see if we can get back above the 51 and get above the 9, but definitely some weakness coming in here. 30-minute, we are coming and trying to get back above the 9 right now, but we've got good slope and separation to the downside. To the 15-minute, we are trying to change the trend. We're in consolidation mode here, but we got a possible trend change on the 15-minute, and then on the 5-minute, you can see that we are starting to get an upward trend and a move up with slope and separation. So again, keep in mind that this is a normal pullback. This is a normal pullback, believe it or not. I mean, it's not really huge. We had a, what was it, 60.75, and her low was 42.50. So it's an 18.25 point range. That used to be a fairly normal range. Not so much in the Globex, but certainly better than what we've been seeing with these 5 and 6 and 7 point ranges. So taking a look at the structure. So we came up, we consolidated, and then we started accepting value higher. We had our gap up day. They went in. They did not take out the Globex all-time high, so we do have an unequalized high. Now they're only one tick apart. Our all-time high in the RTH is 62. Our all-time high in the Globex is 62.25. So sometimes this will lead to leaving it alone for a while. But the key is that we're right back, into the balance that we just left. I'm going to put a larger time frame profile in. You can see that the 49 is the microcomposite VPOC. We're right on top of it. I want to accentuate the value area. So we're right back inside of this value. We did leave some value above at 53. So if we get above this 51 area, then I'd be looking for a push up into the 53 and test this value. The value area high is 54. The value area low is 43. 43.50. 43 remains the key line in the sand. We tested it. We're likely to see some rotation here with a downside bias. I'm looking for a move up into testing the 53.55 area, possibly the half gap right now. If we opened right where we are at 50.50, our half gap fill is going to be 55.37, and that takes us up to testing, the value area high, up here at the 54, possibly even up into this 56. But I do expect that the gap is going to be left open above us, which means there'll be repair to be done. We've got the unequalized all-time high up there, and we also are going to have a gap up there. But this could be the start of a move to do some repair work back down below the 43 and down into this thin area that I was talking about yesterday, that I'm anticipating that we're going to spend some time in it. So let's start putting our levels in. Our overnight high is 60.75. Our overnight low is 42.50. A little bit lower. Okay, I wanna just clean up this a little bit here. This moves to 49. Our daily ATR is not going to be here. It's going to be our high. Our full session daily ATR is running at 10.16. I'm expecting that to get starting to get expanded now with this 18.25 point move. So our high overnight is 60.75. minus the 1016. We've already gone below our daily downside ATR target. We don't need that. Oh, did I move it down there? I did, sorry. Where did we say 50-50? So we're below right now. We're trading below our daily average true range. So we are seeing some range expansion. We've got this naked VPOC and naked close. These are going to be key targets today. In terms of the upside, 42.50 plus the 1016 is 52.75. So you can see that based on, you don't see this very often. And this looks weird because, it's only 2.25 points, but we've expanded. So you have to take off the high and take off the low. Personally, I'm not worried about the ATR on the upside, so I'm just going to take that right off. This is what I want to pay attention to. We've expanded the range below the average daily downside, so I'll be watching this in terms of am I looking really for a more downside move? Our weekly ATR downside target, our full session daily ATR is 36.025 off of the all-time high of 62.25. Our weekly ATR down is 36.25. In terms of critical mass, it's actually down just a little bit further, down below 32.25. I don't think critical mass is going to come into play today, but this will move up tomorrow, and I think it'll be more important tomorrow. So our overnight VPOC is not likely going to change. It is sitting right on our micro composite VPOC and our naked VPOC. This, for any trade plan is going to be in a very important level, and we're going to hit this today. It's just a matter of how we hit it. I mean, we're only trading 3 ticks off of it. What's the time we've got? 9:06, so we got 20 minutes to go. So we're obviously going to open up with a huge gap. So the first thing is, do we even have a chance to close that gap? We've got a naked VPOC that we left above at 56.75 that we actually jumped over, and then of course we've got yesterday's naked VPOC at 49. In terms of levels, there's not a huge a lot, but I was talking about that 51 area. I'm going to use 51.75 as my over underline. Oh, that's not what I wanted. Our key line in the sand is back to where it should be. Down here, I was using a temporary key line in the sand there at the 50 area. The 43 is a real key line in the sand. In terms of levels below us, we've got to pay attention to the 44.50. There's not much there to guide us. The 54, I'm actually going to use the 55.50 because that was where that value area was on the smaller time frame, and then obviously 57. a quarter, get us back inside of yesterday's range. The value area high is not that important. The 62 will be more important. All right, so those are the levels. Our hypos are going to change slightly. We're going to be opening up outside of range, outside of value with the big gap down. So I'm looking for responsive buyers on the open, pushing up towards that half gap fill. And I think the first resistance is probably going to be around the 51.75 to 52. In fact, you know what? I'm going to move my over underline to that 52 because that is your range low from yesterday, or 2 days ago, I should say. Take this off right there. And then we've got our half gap fill. So open auction, out of range, responsive buying up and somewhere between the 52 and the 55 area. I'm looking for initiative sellers to step back in, leave the gap open, and work our way back down towards this 49. Chop around here, maybe even give us a push down to the overnight low. Just keep in mind the overnight high is all the way up at 60.75. So if we don't fill the gap, we've got to be targeting the overnight low because it's high probability. Even though yesterday we did not close that, we did not take out that overnight stat. It's still a valid stat with a 96%, 97% probability. So that is hypo 1 or plan 1. Responsive buyers up into the 52 to 55, finding initiative sellers, rotating us down into the 49, chopping, pushing down, testing that 43, and taking out the 42. That is hypo. And then I would expect that it would rotate back up towards the 49 and close back into balance. Our hypo 2, because of the size of the gap, has to be a gap and go continuation day down. So I'd be looking at an open test drive, failure to get above the 52, and sellers take control, push us down into the 43, chop here, fail, and push down and come down into this 35 area, find a base and start working our way back up. And how high we go, I don't know. But basically another continuation day and a close in the red. Then hypo 3 is going to be a open auction out of range and basically trading sideways between the 43 and 54 area and just having a fill-in day, okay, back inside of this balance here. That is hypo 3. And then hypo 4 is an open auction out of range, a failure to take out the overnight low somewhere between the 49 and the 43, finding responsive buyers, rotating us up, chopping in the 49 to 52 area, basing, and then coming up and coming back up to test the range and targeting this 56.75, possibly the 59, and the gap close. That is not without possibility if the buyers come in on this dip and we see those buy the dip buyers again. The alternative hypo, it really doesn't matter much. You can make your own. I'm going to go and take a quick look at gold. This has got a little bit long. So gold, we talked about the fact yesterday that if we couldn't hold the 83, that we're likely to come down to the 78, 79 area, possibly even the 75 area. We didn't quite get down to the 75. We got the low of 77.6, but they found the buyers. That's a 30 point, almost a $31 move, and we're back up, and we're back up in that 87 area. So if we can hold that 83, basically Today's going to be the same as yesterday in gold. We should see where balance is for the 2 days. Balance for the 2 days is right there at the 83. So looking to hold the 83. If we can hold the 83, looking for them to make the move back up towards that 91 again, and possibly start basing around this 91.60. If we can't hold the 83, I doubt the 78 is going to hold, and we're likely going to come down a little bit further into the 75 area. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.